In today's video, we're going to discuss how to live retired now, even with a smaller account, by using Yieldmax ETFs with massive dividends like TSLY, which is a synthetic covered call ETF on TSLA. Now, you can't just drop your entire account into TSLY. There's a system required of doing this sustainably for the long term, especially with smaller accounts, and I'll share with you that system now. Yieldmax dividends help us earn over $300,000 per year in dividends, as you can see below, and our performance value shows that we're beating all of the indexes. Once again, we're up 19% for the year, the S&P is up 10, and the Nasdaq's up 11. So we're beating all the indexes on a year-to-date basis with Yieldmax funds, and on a daily basis, we're up $7,000 or 0.74% on Friday. And if you look above, that beat the Nasdaq. So we're beating all the indexes on a daily basis and on a year-to-date basis using Yieldmax, Defiance, and Cornerstone funds. They help us live the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. It's really unusual to get outperformance like this over the indexes like we're getting, plus to get the day's gains that we're getting with the dividends. That's also really unusual. Okay, $300,000 per year in dividends, plus we're outperforming, okay, on a year-to-date basis, and on a daily basis we're up $7,000. So we're getting best of both worlds, dividends and capital gains from Cornerstone, Yieldmax, and Defiance. And there's a system to doing this properly, to getting this outperformance even with a smaller account. And the first thing you have to do to get started is to take out a loan. Okay, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a modest amount of that margin purchasing power to get ahead. This $200,000 that I have in the form of a margin loan will be paid back in less than 1 year thanks to my dividends, which are over $300,000 per year. So you can take a loan out. You can use credit cards, personal loans, whatever you want to get started. I used a loan from my parents. I got a $2K loan from my parents to start, like Buffett and Dan Loeb did. And then I sold my favorite car. I lived at home for a while, and I used a job to build up my account to over $25K. Once I got the $25K, I was in business, because with every $1 you put in your account, you get $4 after you reach $25K at E-Trade. At other brokers, it's less or more, but with E-Trade, again, if you put in $25,000, you get times 4 to play with, so we get $1.5 million to play with. 25K is the magic number once again, and I never touched margin at first, thinking it was taboo. But when I learned about how the rich use debt to get ahead and how Elon Musk used margin to buy Twitter, that information changed my life. Margin and maintenance. Maintenance is the key to the FIRE lifestyle, okay? Financially independent, retire early. As you can see here, TSLY is 50% maintenance. So TSLY might have a 57% dividend, and it cash flows you in 2 years. So even if you're down on paper and you're losing in TSLY, well, you're still winning in the next 2 years, because if you hold TSLY for 2 years, you're paid back in full. However, the margin maintenance on this is 50%, and it sucks up half your equity. If you need help understanding maintenance, that's in my Volume 3 e-guide. So again, with Yieldmax, you have to watch maintenance, and when you're using margin, you especially have to watch maintenance, because even if you don't use margin, you want to have low maintenance names so that you can withdraw freely out of your account. I can withdraw anytime I want out of my account. With this available for withdrawal, we can withstand over 30% corrections in the market, and I can still withdraw freely from my margin debt. So even though I have margin debt on here, I can swipe my E-Trade credit card and go wherever I want in this world, even in debt, and I just add to my debt. But the key is having low maintenance, which keeps your available for withdrawal high, and TSLY, again, is high maintenance. So you have to be aware of TSLY, and also you don't want to put all of your eggs in one basket, okay? TSLY is a stock. Stocks can fall by 50% or more in a given bear market, whereas indexes usually fall 10 to 30% in a bear market. Yes, once again, the TSLY dividends will cash flow you over time in less than 2 years, but can you stand all that pain up front, especially when you're in margin? So you have to go for lower maintenance names or switch to a broker with lower maintenance. Robinhood and IBKR are great for lower maintenance, but they don't offer closed-end funds like Cornerstone, who have the special drip. Cornerstone is the secret to my success at this channel. Even if you have a smaller account, you want to own some Cornerstone. Cornerstone is the index, and it's a 4-star fund. So 4-star fund, Cornerstone is, and it's the index. It tracks the S&P largely. And as you can see on its chart, it moves upward left to right on Morningstar's chart. But on E-Trade's chart, you see it goes sideways to down. That's because you have to factor back in dividends, drips, and rights offerings. Cornerstone, like many other closed-end funds, has rights offerings almost every year. So you have to time this fund between its rights offerings. It's indexed, so it's tied to the S&P. It has a 21% dividend every year that it sets at its NAV, and it averages 20 to 30% premiums. Unlike with open-ended funds, closed-end funds have these premiums. So you can get the 20% dividend and the special drip, where when you buy this fund, if you own it up here, it's dripping the dividends down here at the bottom for free money every month. So you're getting the 21% dividend and the special drip, plus you're getting these 20 to 30% premiums, where once again, if you time them between rights offerings, you can really level up your account. If you need help understanding how to play Cornerstone between its rights offerings, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. We have almost 1,000 members here in the Discord chat room pursuing the FIRE lifestyle, and we're all on top of this rights offering announcement because it's the most important thing to leveling up our account. It's what stands in the way of us and financial freedom, is this rights offering announcement from Cornerstone, because once the rights offering is announced, it's going to drop the stock precipitously, and that's why you want to sell before that and get in after it's done, and then you reload your gains, because you pocket those 20 to 30% premiums, and you pocket the 20% dividend and the special drip, and then you just rinse and repeat after every rights offering process. So if you can sell before that rights offering and buy back after, it really levels up your account, and you avoid all that pain on the downside initially when the rights offering begins. And this is pretty straightforward to do, but most people buy my e-guides just so they get the alert from Cornerstone in Discord. So if you buy my e-guides, you get this alert, and I watch the alert every day for Cornerstone when the rights offering occurs, but you never know if you might miss it or not. Maybe you're out of town for a day or so, so the alert comes here in Discord in case you miss that. So you can't just put all of your eggs in one basket like with Tesla, because headline risk is too great with Tesla. Elon Musk can say the wrong thing and Tesla will tank overnight. I index my 4 times margin power with Cornerstone because that's the only way to invest anyway, to stay indexed, especially when you're using margin. You have to stay indexed with dividends so that you can pay your bills in a downturn. If the SPY goes down in a bear market, it doesn't have a dividend. But if Cornerstone goes down in a bear market, it still pays you the 21% dividend. The dividends don't fluctuate, and these help you pay your bills even when you're in a bear market. But how can you stay indexed with big enough yields to actually live retired on and to pay bills with without eating into your capital base, especially in a bear market? How can you stay indexed with things like Schwab D, SPY, again, if they don't have big enough dividends? Well, the answer once again lies with Cornerstone. Cornerstone's dividends don't fluctuate in a bear market, unlike with Yieldmax and TSLY. Cornerstone sets its 21% dividend for the year, and they don't fluctuate until the next year. This is a reason not to put all of your money into one stock like TSLY, because they can drop their dividends in down markets, unlike with Cornerstone. TSLY, it goes by its volatility, so if the volatility drops in Tesla, then its dividends will fall in a down market. Unlike with Cornerstone, it doesn't go with volatility, it goes by different metrics, so it will keep its dividend the same that year. The next year, it will change it. Some years they raise the dividend, some years they lower the dividend, but if they do lower the dividend, the key is resetting your yield with the rights offering. And once again, if you need help with the Cornerstone rights offering, that's in my Volume 4 e-guide. Then you have to diversify with other dividend funds that are indexed, like Defiance, who also have lower maintenance. QQQY has 30% maintenance, whereas Yieldmax has 50% maintenance. So that's a huge deal here, okay? QQQY, once they lower the maintenance, I put a lot more money into it. QQQY has 30% maintenance, and it has a 70% dividend. So with this lower maintenance, we're preserving a lot of our equity. And again, if you need help understanding maintenance, that's in my Volume 3 e-guide. And it gives you a 70% dividend. So we're getting all of these dividends to help us pay down our margin much faster with QQQY. And in a down market, QQQY tends to outperform the NASDAQ. So that's how we're outperforming the markets on down days, even when being in this extra 200,000 of margin debt or leverage, whichever you want to call it. With this leverage, we're still outperforming on the down days. You would think on down days we're getting killed, but you've seen by my past videos that we actually outperform on down days thanks to our unique combination of index dividend funds like Cornerstone, Defiance, and Yieldmax. Yieldmax, obviously, I keep it small amounts because they're stock-based, and so you have to trade around Yieldmax to offset the erosion. Cornerstone gives you the growth upward, left, to right on its chart if you time it between its rights offerings, and Defiance gives you the extra growth that's also not only paying down your dividends, but it's qualifying for more loans to banks, because the income that we receive, the $300,000 in dividends that we receive, this is qualifying as income to banks for more loans to level up our account faster. So you start with a small account with a loan of some sort. Then once you get your dividends built up, you're building up your credit history in a way to the banks, your qualifying income history to the banks, and this allows you to get more loans to level up your account faster once your dividends get to a good enough amount. And you get your dividends high up quickly by using margin. So you use a loan out of the gate to get your account going, and then you use margin to get your dividends going even further, and then that acts as more qualifying income to banks for loans, which then give you more loans to put in your account and level up faster with. Then all of your dividends pay back both your margin debt and your loans from the banks. Qualifying income is better to have than good credit, in my opinion. I get way bigger loans with the higher income amounts that I have from dividends than I ever did with high credit scores. You need both though, good credit and qualifying income, to qualify for bigger loans from the banks. Except with margin, that has no credit check or pre-approval needed. It's automatically granted to you, so margin is a much faster way to grow out of the gate, in my opinion. The main thing for beginners to realize is that they have to sacrifice up front and take loans to get ahead, like the greats did and most real estate investors do. Loans help you level up your account so much faster and provide qualifying income that trading can't provide. 90% of traders lose anyway, so why go that route? Why not stay indexed and stay indexed with dividends so that you get more qualifying income? Trading gains, again, won't give you any qualifying income because they don't consider that as consistent. It's too up and down and unpredictable. Banks only accept dividends as a pay stub because they are more reliable than trading, even more so than your job. What's more stable, your job or the earnings from Fortune 500 companies? These dividends also help provide other loans to you even in a down market. I got my Lexus last year from qualifying income and nothing else. Even if the market is down, my income still shows up to the banks. Then I just finance my car and my dividends pay back the car loan automatically out of E-Trade. All of my bills are automated out of E-Trade and I just add to my margin debt that way, and my dividends pay that back down. I don't ever have to pay back my debt if I don't want to. The interest just keeps adding on, of course, except we have low interest, so we don't mind. I've negotiated my margin rates down twice. Many of my clients who bought my e-guides did the same thing. My interest is around 6%. And when you buy my e-guides, not only do you get free access to the Discord chat for life, where we alert you of the Cornerstone rights offering announcement, but you also get my phone number, so you can call me anytime you need help negotiating your rates down. I can also help walk you through maintenance or how I use options or whatever questions you may have about your brokerage account. When your account gets big enough, you can sell options against your equity to get more income. I sell these options here. We earn about $30,000 to $50,000 per year in premiums on a given year with these options that I sell. All these options here, they not only pay me thousands of dollars in premiums, but they lower my margin debt by that equivalent amount. So if I make $50,000 from selling options, then my margin falls by $50,000 and I lower my interest in the process. Bitcoin, IEP, BitTo, we sell options on these. They give us many thousands of premiums in return. BitX, we receive $6,500 just for selling 2 puts on it. With the click of a mouse, we got $6,500 in cash to pay our margin debt down with. If Bitcoin goes down, we're getting hurt way less than other people because these are long-term puts and our cost basis is much lower than Bitcoin outright. Our cost basis is 50 minus 32, so we're 50% lower than most people are just to receive a break even with our Bitcoin options. So all the options that I sell, they lower my cost basis and add to my income significantly, and they pay down my margin debt significantly. And again, you can do this once your account gets big enough, but understand when you sell options to watch maintenance as well. So if you need help selling options, that's in my volume 6 e-guide. And once again, if you need help understanding maintenance, that's in my volume 3 e-guide. You can also look into insuring your portfolio as it grows, like I do with buying put options, which is totally different than selling options for extra income. I always keep puts on for extra insurance just in case. So we can withstand over 30% corrections in the market, as I've told you, and still withdraw freely out of my account. But we also have put options on just in case the market crashes overnight, which will make us a lot more money in the event of a fall if that were to occur. So we have put options on at all times. We keep a small amount on so it barely even budges our margin debt. And again, it helps me sleep at night because it insures my portfolio past the 30% correction. If you need help understanding how I use puts for insurance, that's in my volume 5 e-guide. So you have to find ways to sacrifice and save money up front. You have to do what you have to do like I did and get a loan of some sort to help you get out of the gate easier. Loans are everywhere. You just have to know where to look. If you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. We also have over 1,000 members here in the Discord chat room pursuing the fire lifestyle. So if I can't answer whatever questions you may have on your brokerage account, they most likely can. You can also follow my portfolio by clicking the join button here on my wall, or I'll link that in the description below. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.